We are covering the 7 top actively traded stocks that are bullish today. While watching price actions, let us inform you. Our review on CRWV. CoreWeave Incorporated, the cloud infrastructure company specializing in AI-optimized cloud services, is making serious waves today, up 16% on massive trading volume, with 53 million shares changing hands. The surge comes on the back of 2 big developments that highlight CoreWeave's rising influence in the AI computing space and its unique positioning as a key supplier of high-performance cloud infrastructure. First, CoreWeave became the first cloud provider to submit AI inferencing results for NVIDIA's latest GB200 Grace Blackwell superchips under the MLPerf Inference version 5.0 benchmark. For those unfamiliar, MLPerf is an industry-standard benchmarking tool that measures how well hardware and software platforms perform AI inference workloads, the kind of tasks that power everything from generative AI to recommendation systems. The fact that CoreWeave is leading the pack in this space sends a strong signal. Their cloud platform is built for the next generation of AI computing, making them a critical player in this industry-wide AI arms race. As more companies compete to train and deploy increasingly complex AI models, having a proven, high-performance infrastructure like CoreWeave's becomes a major advantage. But what's really catching investor attention is the news that Google is reportedly in advanced talks to rent NVIDIA Blackwell chips from CoreWeave. This is a massive validation of CoreWeave's business model and its ability to secure high-demand AI hardware. Google, one of the biggest cloud computing providers in the world, has its own extensive AI infrastructure, but even they are struggling to get enough chips to meet demand. The fact that Google is turning to CoreWeave rather than simply expanding its own AI cloud services highlights a few key dynamics. First, that CoreWeave has established itself as a major intermediary between NVIDIA and enterprises looking for AI computing power. Second, that CoreWeave is agile enough to set up AI-focused data centers faster than some of the bigger cloud players. And third, that its access to NVIDIA's latest chips is proving to be a major competitive advantage. This potential deal also reflects a broader trend in the AI hardware market. Demand for high-performance GPUs is at an all-time high, and supply constraints are forcing even the largest companies to explore alternative solutions. CoreWeave's close relationship with NVIDIA appears to be paying off, allowing it to offer AI infrastructure at scale when other providers are struggling to keep up. If a deal with Google materializes, it would not only be a major revenue driver, but also serve as a huge stamp of approval, likely attracting more enterprise customers that are looking for reliable, high-performance AI cloud solutions. With AI computing at the center of nearly every major tech development, from large language models to autonomous systems, CoreWeave is sitting in a prime position to benefit from this demand surge. Today's stock movement suggests that investors are starting to realize just how valuable CoreWeave's role in the AI ecosystem could become. If it continues to capitalize on its relationship with NVIDIA and land major clients like Google, this company could very well establish itself as one of the dominant players in AI cloud infrastructure. Our review on RKT. Rocket Companies Incorporated, the fintech powerhouse behind Rocket Mortgage, is having a standout day, up 10% with a hefty 34 million shares traded. The catalyst? A major upgrade from Deutsche Bank, which just bumped the stock from a hold to a buy and raised its price target to $16 from $14. And it's not just the upgrade that's got investors excited, it's the reason behind it. Rocket recently announced a massive $9.4 billion acquisition of Mr. Cooper Group, a major home loan servicer. This isn't just any acquisition. This deal is expected to be a game changer, potentially boosting Rocket's earnings per share by 38% by 2027. That's a big jump, and it gives Rocket a ton of new firepower in both mortgage origination and servicing. With Mr. Cooper's $1.5 trillion loan portfolio coming under Rocket's umbrella, the company is setting itself up to be a dominant force in the mortgage space, no matter how the housing market shifts. Now, why does this matter? Well, the mortgage industry is highly cyclical. When rates are high, refinances slow down, and when rates drop, business picks up. By adding a giant servicing business to its portfolio, Rocket is diversifying its revenue stream, making its earnings more stable across different market conditions. Deutsche Bank seems to think this move puts Rocket in a strong position to hit its 2027 goals, including capturing 20% of the refinance market. That said, not everyone is ready to jump on board. Some analysts point out that Rocket stock is already trading at a premium compared to other mortgage companies, and integrating a massive acquisition like Mr. Cooper is no small feat, but investors today are clearly feeling bullish as the stock continues to push higher. Big picture, this acquisition cements Rocket's position as a serious player in the mortgage and financial services space. If they can execute on this deal effectively, they could be looking at a much bigger and more stable business down the road. Our review on MVST. Microvast Holdings Incorporated is having a solid rally today, up 14% with 21 million shares traded, as investors react to its latest earnings call. The battery technology company reported record annual revenue of $380 million, marking a 24% increase from the prior year, with Q4 alone contributing $113.4 million. On top of that, gross margins improved significantly, jumping from 18.7% to 31.5%, highlighting better cost efficiency and operational execution. One of the biggest drivers of growth came from Europe, where Microvast saw a 123% revenue increase, particularly in Italy and Germany. This expansion underscores its growing footprint in the region, as demand for advanced battery solutions rises. The company is also making strong advancements in battery technology, especially in silicon-based cells and all-solid-state batteries, both key to the future of EVs and large-scale energy storage. However, not everything was positive. Microvast posted a GAAP net loss of $195.5 million for 2024, nearly doubling from $106.4 million in 2023. The company also saw a 19% revenue decline in the APAC region, as it pulled back from lower-margin businesses and faced increasing competition. Financing remains a challenge as well, given the capital-intensive nature of scaling battery production. Despite these hurdles, the company is projecting strong growth for 2025, forecasting an 18% to 25% revenue increase, targeting $450 to $475 million while maintaining a 30% gross margin. Investors are responding positively to the strong growth trajectory and expanding global footprint. But with ongoing losses and market competition, execution will be key in keeping up the momentum. Our review on WOOF. Petco Health and Wellness Company Incorporated is making waves today, with shares jumping 12% and 15 million traded after hours. The reason? CEO Joel Anderson just made a massive bet on the company's future, snapping up nearly 1.6 million shares in a transaction worth $4.72 million. Moves like this don't happen every day, and when a company's top executive is putting millions of his own dollars on the line, it sends a strong message to investors. Insider buying at this scale typically signals confidence, especially in a company that's had a rough stretch. Petco's stock has struggled in 2025, down 12% year-to-date, even lagging behind the Nasdaq's decline. But this spike comes right after the company's Q4 earnings call, which painted a complex picture. Strong EBITDA performance and strategic cost-cutting moves were positives, but store closures and rising expenses cast some shadows. The mixed earnings results led to a divided reaction from analysts. Jefferies lowered their price target, citing the need for fundamental improvements under the new management. On the other hand, B of A sees a bit more upside, though they acknowledge potential long-term competitive pressures. Wedbush, meanwhile, sees progress in cost management and retail operations under Anderson, but remains cautious on sales growth. This kind of uncertainty keeps investors on edge. But Anderson's buy might be the kind of reassurance the market needs. Then there's the short interest. Around 37% of Petco's public float is being bet against, making this one of the most shorted stocks out there. That's a setup that can lead to some explosive moves. When an insider purchase like this happens, short sellers can start feeling the pressure, potentially triggering a short squeeze. That's likely part of the reason why the stock surged today, as traders rush to cover their positions. So what's next? This could be a turning point if Anderson's confidence is justified, or just a short-lived bounce in an otherwise challenging market environment. But one thing's for sure, when a CEO makes a move this big, investors take notice. Whether it's the start of a real comeback or just another volatile swing, Petco just got a lot more interesting. Our review on PACB. Pacific Biosciences of California, Incorporated, had a strong day in the market, surging 12% as investors piled in. This life sciences technology company has been making waves with its cutting-edge sequencing solutions, and today's pop suggests that confidence in its long-read and short-read sequencing tech is building. While there's no single major news catalyst driving today's move, PacBio has been positioning itself as a key player in the genomic space. Its hi-fi long-read sequencing is widely regarded as one of the most accurate in the industry, making it a go-to for researchers tackling complex genetic problems. Meanwhile, its newer short-read sequencing tech, sequencing by binding, is adding another layer of versatility, allowing PacBio to go head-to-head with industry giants like Illumina. Recent earnings have shown solid demand for its Revio sequencing system, which has been a game-changer in scaling long-read sequencing. More researchers and clinical labs are turning to PacBio's platforms, and the company's aggressive expansion into oncology and infectious disease applications could unlock even bigger opportunities. The stock, however, hasn't had the easiest ride, with volatility being a constant theme. But today's double-digit gain could be a sign that investors are starting to see the long-term potential. With genomics playing an increasingly central role in medicine and research, PacBio is in an intriguing position. Whether this rally has legs will depend on execution, market adoption, and competition, but for now, it's a name that's catching some serious attention. Our review on NFE. New Fortress Energy Incorporated has been in the spotlight today, with its stock jumping 13%. The big news here involves Accelerate Energy, a key player in the LNG infrastructure space, which just priced a significant follow-on offering to raise $184 million for an acquisition of New Fortress's Jamaican assets. While Accelerate Energy's stock took a 7.4% hit due to the upsized share sale, it's clear that the market is reacting positively to the potential of this deal. For those unfamiliar, New Fortress Energy is all about providing energy solutions through its vast infrastructure. It owns and operates a fleet of ships and terminals, focusing on natural gas and LNG. The company's strategic position in the global energy market makes it an essential player, especially as the world continues to pivot toward cleaner energy alternatives. Now, the deal with Accelerate involves New Fortress Energy's assets in Jamaica, which include natural gas terminals and other key infrastructure. The cash raised from this offering is intended to fund the $1.06 billion purchase. The deal underscores New Fortress's ongoing efforts to streamline its operations and focus on its core assets, which investors seem to be reacting to favorably today. Despite some of the volatility around the deal, including the drop in Accelerate stock price, New Fortress Energy's jump today is a sign that the market believes in the strategic moves the company is making. While the broader market has been a bit tough on NFE stock, this acquisition deal could provide a much-needed boost. especially if it helps to optimize New Fortress's global operations and enhance its cash flow. If this deal goes through smoothly, expect New Fortress to continue to attract attention as it solidifies its position in the LNG space. Our review on LUNR. Intuitive Machines Incorporated is making big waves in the space exploration industry, focusing on a broad range of products and services that support everything from lunar missions to building key space infrastructure. The company is developing lunar mobility vehicles, propulsion systems, and even Earth-to-Moon communication networks, positioning itself as a leader in the next era of space exploration. Despite some recent challenges, Intuitive Machines saw a solid 11% jump in its stock price today. The spike came after the company highlighted its financial strength, despite reporting a net loss of $347 million for 2024. Although the company missed earnings expectations and issued a lower-than-expected 2025 sales forecast, CEO Steve Altemus reassured investors with the claim that the company has a fortress-like balance sheet. Ending 2024 with $385 million in cash, Intuitive's financial position is strong enough to sustain operations for several years, even with a cash burn of under $68 million in 2024. Investors are clearly optimistic about Intuitive's long-term prospects, especially with its $4.8 billion NASA contract to develop a communications system linking the Earth and the Moon. Although capital expenditures are expected to rise as the company refines its lunar landers and builds its near-space network, analysts believe cash flow could begin flowing into Intuitive by 2027, potentially crossing $60 million in positive operating cash flow. Overall, despite some short-term hurdles, the stock's recent rise reflects investor confidence in Intuitive Machines' potential to capitalize on major contracts, expand its footprint in the space sector, and continue growing in the coming years. Please subscribe, give the video a like, and watch more from our playlist. Thanks.